Hello everyone, welcome to CryptoPi. In today's video, I want to talk about applying Gaussian channel on the Bitcoin in its USDT evaluation. But to get the Gaussian channel indicator, go to indicators in TradingView and you simply type Gaussian and you get here Gaussian channel. It is based on theory by Ehlers. Here the idea is that the price undergoes exponential moving averages. The filter is applied based on multiple exponential moving averages, and they're applied multiple times. You can look at the code and identify how the exact functioning of Gaussian filter is. But for this video, I will simply use directly its application to identify what really happens when it is applied on the Bitcoin chart. All right, so here what we see is the Gaussian channel. It has two bands. In the settings, you don't have to do much. I think source and poles and sampling period, all of these parameters can stay as they are. What really is good to know is the high band and the low band and the filter value, which are just three lines: high band, the filter value, and the low band. What has happened in, I think, almost all of the Bitcoin cycles is whenever the price crossed the high band, crossed under the high band and had a candle close under the high band, Bitcoin stayed for a significant amount of time in the Gaussian channel or under the Gaussian channel. And this significant amount of time was approximately 1 year. This was the first cycle where you had a significant close, a decisive close rather, in 2011, and then we see it, the price stayed inside the Gaussian channel until the next bull run began. Over here, we did see price, the complete candle, close under the Gaussian channel. We had a slight pullback, probably a bear trap here. However, this bounce did not lead to another all-time high in 2014, but rather it was just a bear trap, making traders think that we can go long and it will make another all-time high, but it did not happen. The price went back to the Gaussian band, went under the Gaussian channel, and it stayed there for a pretty long time. Next one is in 2018. There was quite some euphoria at this point that we have found the support, and soon we will see a bounce back and Bitcoin will continue its crazy parabolic run from the way it had in the bull market over here. And what really happened was Bitcoin crashed from this point another 50%, approximately 50%. We also had the Corona crash afterwards. But over here, we were already in the bull run. And the way we have discussed that this crash would not have sustained longer, because of the 4-year cycle, we were in bull run. And this 4-year cycle, we define it using the accumulation and distribution lines. If I switch them on, see it, the Corona crash did happen, but it did not sustain for a long time because we still were in the 4-year cycle of the bullish momentum of Bitcoin. In the current cycle, let's talk about the cycle over here. We saw price touch the band, but there was no significant close inside the band. There was a significant close over here, and price continued to stay in the downtrend up until it crossed the accumulation line. We did see another drop of around 25% after the price crossed the accumulation line. That's when Bitcoin formed its bottom at around 15,000. But once the bottom was in, we saw price make almost upwards momentum. It maintained its upwards momentum for 3 years. I've read it on social media, people saying that we did not have the right parabolic rally. This term that we did not have the right parabolic rally is very subjective. What exactly is right? If you see it from the bottom itself, we had 600% increase within 3 years. That's not bad. That's really good, I must say. Of course, it did not make a parabolic run like this one, but as the asset matures, we know that it takes quite some amount of capital for asset to make parabolic runs. Here, the market was still not mature enough, and over here we see market has matured pretty good. For this year, price has been very clear, much more clear, I must say, as compared to previous years, because over here price crossed the distribution line, which is the indication that now it is not going to make another all-time high, and it is going to be in its downtrend phase of the 4-year cycle. And almost immediately, within 3 weeks, we saw a significant close inside the Gaussian channel. So now the price, according to previous patterns, is quite likely to stay under the Gaussian channel until it crosses the accumulation line. Over here, price stayed under the Gaussian channel until it crossed the accumulation line. Over here as well, and the same story repeats in every single cycle. This is the only cycle, the very first cycle, where the price action was still, I must say, the market was still very volatile, and it's difficult to analyze this because probably there were not big players, the market orders, market makers were not, let's say, strong enough to see how volatile the price would be. But apart from the very first cycle, if you would analyze based on the distribution line and the accumulation line, and you look at the Gaussian channel, there is not much complicated theory here. It's quite simple, that you are in a midterm year. In midterm year, price tends to go down. Price tends to go down after it has crossed the distribution line. Price bottoms after it has crossed the accumulation line, and the bottom is usually before the pre-election year starts. In previous cycles, the bottom formed between this time period of accumulation and pre-election year, basically Q4 of the midterm year. Over here, it's the same between these two lines, that's Q4, and it's quite likely that we might see the bottom in this time period, which is Q4 of 2026. I think that would be all for today's analysis. If you like the content, then do hit the subscribe button, and I will see you in the next one. Bye-bye.